The immediate short-term upside targets mentioned during yesterday's video thread of analysis met like a charm today before facing a pullback. The pullback we are seeing can be indicative of a few things. They are also things that we must be immaculately aware of. Let's pop open the hood for a look into next week's price. Welcome back to the channel on this happy Friday. This is ARCa, and let's dive into AMC. Let's kill 'em, team. What is up, you guys, and welcome back to the channel. Please do me a favor, hit that like button, subscribe to the channel, do everything necessary to get this thing to live long, thrive, and survive. Let's go ahead and take a look at here at AMC, right? This is the price action that we were talking about just yesterday, where we were observing the higher probability targets of coming up to this $4.66 zone, right? So we have three thresholds, right here, 462. We have the 64 and 66. Take a look at the OHLC at this very top side candle. This is the OHLC, open, high, low, close values of every candle printed. You have the top end right there at a high at the H right there. Of course, guys, you have the receipts. You have the screenshots taken from every single thread that we go over, right? 466 nailed on the dot, right? Very, very interesting times here. Now, the thing that we were expecting here was to pull back into this red zone before expecting another upside target. Now, that didn't happen. The next thing that we observed was actually a rejection of this area first before coming back down to the loading zone, which we didn't get. Now, if we are getting this loading zone afterward, there are a couple things that could be happening here. The take profit target because of the upside here that we got on the Friday. Also, the immediate fuckery that happens on a Friday because of the options expiring, right? And also because it's Friday. What are we talking about? The historic review here is that Fridays are typically red for equities, right? So if we are getting that pullback here, it could be some of those reasons, but there is one more reason that could be indicative of a pullback as well. We definitely got the weekly closure today, right? So the weekly closure is looking just like this, right? So we got that upside here, right, to that 466 area right up here, right? Actually, let's go ahead and see. Let's just make sure that we did get that to the 466, right? So let me go ahead and bring you over to that weekly time frame and show you what that looks like on the weekly candle that we're in, right? So this is that 466 area right up here, right? So this usually what happens here is that as we start to make the closure happen for a weekly time frame candle or any type of candle, as we approach that closure, we decompress, right? We typically come back to around the 50% of the bar itself. The 50% is actually located around that 452. You can see that price action right now is at $4.52. So it's somewhat relative to that 50% pullback of the prior bar. Now, what's good here is that we closed at 450. That means that the prior bar retrace would be an upside naturally. So 454, 455 would be next in line here as a typical pullback or a retracement of that bar. Okay, now, let's go ahead and take a look at the options flow, right? I'm going to go ahead and switch over the screens here and show you this side of things because I have some interesting things and developments to show you here. Now, this is the open interest change for the options contracts that are coming in. Now, remember, for those of you who are new to options, we're going to leave it very simple here. The call options, when you long call, that just means that you're betting the upside, right? And when you get a long put, that means that you're betting the downside on the asset, okay? Using an options contract. Okay, so options contracts expire. They do have an expiry date, and it's located right up here, okay? They also have a strike. You can say that I'm betting the upside from a target, and I expect it to get to that target in whatever time frame that I'm expecting via the expiry, right? So you can say, I want to bet $10 to the upside at the expiry of October 18th. Right? So you can say that your agreement is that we would make an upside move to around that $10 mark by the date of October 11th in your agreement when you buy the contract, right? You're not signing like an agreement or anything like that, right? You're just purchasing it online, just like you on your broker, right? Just like you would any shares, just like that, right? So in this case, I want to show you the open interest change, right? So the open interest right now change is actually this. Many people have added to the $4.50 zone for today. Great. And also, lots of people were removing risk from today as well. Knowing that we have that massive move coming in, people were removing their risk from also the puts because they would get squeezed, right? They're going to get squeezed out. Okay, now let's go ahead and take a look at this though. For October 11th and October 18th expiries, take a look at how many people are adding to their risk here. People are adding to the $5 strike, right? People are adding specifically to the $5 strike here at October 18th. Now, I want to go ahead and show you that people are also removing their risk from the put side. People that are betting the downside are removing risk, right? Very good stuff here. Those are things that we want to see. Now, for the larger numbers, like the November 15th, we still have people adding into these strikes too. This is a $5 strike. People betting that this is going to go to $6 by that time as well. Now, if we go further, you can see here that on October 4th, people are adding in here too at the $10 strike. There's one put, right? Incredible stuff here. Now, let's go even lower. Check this out. People are adding like crazy inside of the June 20th, 2025, all the way to the $27 target. These are the calls right here, 5,777 on the open interest to 0 puts. Very, very interesting times here of what we're seeing. Okay, guys. So now let's go ahead and take a look at the open interest in general and take a look at what we have here, right? So very cool stuff here. We have a $6, 22,447 to 153, right? Call to put ratio here. It's incredible. Incredible the amount that people are adding. Look at this, $10 strike at that October 18th expiry. We have 17,648 to 3. Same situation here on October 4th expiries at the $10 strike. We have 13,887 to 1, guys. And I mean, look at this one over here on January 2025. You're seeing that right. 30,883 to 0. 10 at $15 strike. $17 strike right here, 10,774 to 0. And then also here, 123,678 to 0. 0 puts, guys. All of these, the call side are completely loaded, right? It's loaded also in other expiries. 15th of November here, we were just looking at that, right? 17,000, almost 18,000 to 100. Very, very interesting times with the AMC asset here, okay? So, and yeah, you can see here, guys, that the call to put ratio is just insane. The only puts that I can see are all the way to January 16th, 2026 leaps. Those are the only puts that are currently above, right? Very, very interesting times here. And now look at this on the sentiment side of things, guys. We completely got a shift right here. The sentiment on the bullish side is completely taking over the bearish side, and now the neutrality is kind of diminishing because the sentiment is, or psychology is now favoring the bullish side. Very, very good stuff. Now that does make sense. If we come back here to the chart, it does make sense because we did fire off a very important signal that we talked about just yesterday, right? We fired off the volatility versus momentum signal on a daily time frame, and that is actually based around the analysis performed by one of my Star Master students, right? That's Dea, coming in with the stats, right? So remember, this is giving us a 73.43% probability that we would get an upside thrust of 13.68% on average whenever that criteria meets, and absolutely met, right? We definitely have the break of the 15% with the volatility component, and we are actually trying to make that upside bias here on the stochastic momentum indicator from completely oversold. That is the criteria here. Upside stochastic, we're looking for the break of the volatility component beyond the 15%. We got it. It fired yesterday. We got some upside today. The 13.68% move to the upside fired at the valuation of here, $4.45. Our upside target would be $5.06. Okay, guys. So that is our probability right now. And I need you to remember that the probability base was, let's go ahead and take a look at the data, right? It's, 73.43% upside accuracy that we would get that $5.06 zone, otherwise known as your 13.68% average upside thrust at the fire of that signal. So very good stuff, guys. I do think that we're gonna face. A little bit of an upside, maybe very short-term downside. I am looking at still the same loading zone that we were observing yesterday, right down here at 448 to 445. Now, guys, please remember that the beginners charting and trading mentorship is going to start this Sunday. Make sure to get in touch with me here at ArcMastersCourse@gmail.com immediately before that gets started. I want to see you front and center. I want to see you there. Okay, guys, we're going to be doing it in the private server, the Arc University. Okay, so please get in touch with me. This is really for beginners, right? So it is actually for you. Make sure to get in touch with me and I'll get you enrolled. Let's see what we can do about your education first. Okay, you guys, thank you so much. And now we're going to go ahead and see if we can do a live prep on Sunday. Let me know in the comments below if you would like me to do a live prep and come on by and see AMC and GME. All right, guys. Well, I do appreciate you coming on by. Thank you so much, and we will chat very, very soon. Please take whatever I do show and iterate within these videos as just a form of entertainment, as I cannot suggest for you to buy, sell, or hold any assets whatsoever. Ever. I need you to do your own due diligence and everything will be cool. But with that said, team, I wish you well. A very, very good rest of your weekend. And I will catch you at the bell on Monday. Adios. Let's go.